Let's see if it's gonna able to record 3.5 hours starting now. Awesome, awesome. So once again, thanks everybody for joining us. Our annual business planning clinic. Step one, we're doing this 2 steps this year, 2 sessions, just because we have a lot of good stuff to share. I'm super excited about it, and you know, it's going to be a fast-moving, intense session, 3.5-hour session, and you know, gear up, get your. I'm going to mute you, Simon, for a second because I have noises over there for now, so you guys can be muted for a few seconds. Get your notepad ready and your scratch pads and whatever you're you know, want to use to make notes, etc. If you have any questions, drop on the chat as we go, because once again we're going to have it back to back. So what's happening today? We're going to open up. It's going to be myself, Stephanie, Simon. We have some basics principle for you for the business 101. We'll talk about, once again, the gist of it. The second part of it is going to be on the second part, November 17th, with Holly and Fritz out in Long Beach. So that's us the next 30 minutes or so, and then we're going to have our CPA, Louis Vasquez. He's physically there. I'm here in West Side, Simon is in South Bay, Stephanie in Calabasas, and we're going to have Louis Vasquez, our CPA, is right now down in Long Beach. He'll talk about how to incorporate your business, Escort, LLC, etc. The differences. Then we're going to have at 150, Doug Pitts. He's an MREA agent. He's going to be there at the Calabasas office. We'll talk about cash flow investments, flips, etc. Then we're going to have here in Westside, Florentine. She's an agent out of our Big Cities office, and she's going to be a panelist. She'll talk about the ADU. You know, which is a hot topic the last couple of years, garage conversions, etc., etc. And she has a company doing that, so she's an expert. She'll talk about that. Then we're going to have Paul Hugh. He's our regional tech director for the KW Western region, statewide. He's going to talk about social media marketing, and then the cherry, the top of the event, basically is going to be our special announcements for another unique service that our KW concierge that is available into our offices will present, the Easy Flip. It's going to blow your mind. So Simon, are you ready? Stephanie, are you ready? Ready. Okay, perfect. So let's do this. Let me just double check for a second that none of our presenters are here. If you're here, we're going to just hang out for a second.
Louis here. We've got the Louis.
Thank you so much. So I'm going to start the session principles. All right. So gear up. You can take screenshots or what have you. Hello. And I'm going to share the presentation later today or tomorrow with the recordings, etc. So once again, if you don't panic if you miss something or whatever. But once again, you can do whatever you see fit. Okay. So I'm going to open up talking about mindset. Mindset, as you know, some of you have been to some of my sessions recently or the last few years, right? I'm pretty consistent with that too. It's all about the mindset. If you have it here set up properly, you can make pretty much everything happening, right? And yes, this session is being recorded. So how do you get into the right mindset, right? Properly. So get the best information daily or only, right? What does that mean? I'll give you an example. Subscribe to the right news for you. Don't subscribe to any news, to the right news, whatever you want to know about, right? I was going to opt out for anything that's negative. Doesn't matter how important or not important it is. I'm not talking about right now the economy is changing or there's this crisis, that crisis. Things that just will not feed my mind and soul properly. So pick up your source of information daily. Every day at 8 o'clock, we have our producer's mindset. Are you there, right? Yes or no? Some of you are, some of you are not. That's just one example of what we do. Michelle Brown of the South Bay office, every morning at 7 o'clock, right, Simon? 7 o'clock, she's doing morning mindset, the miracle morning, daily affirmation. Are you there? Are you not there? So make sure to get it on a daily basis. Number 2, role model the best people. If you're a brand new agent, you assign to a mentor. If you're experienced, find the person that you can learn from, right? That you can model, you can ask questions. If you are a producer in a 100,000 or more, 150 or more GCI every year, hire a business coach. If you're making 130, 150 or more, reach out to us, reach out to your team leader. We can enroll you in MAPS for a month at no cost, 4 or 5 sessions at no cost as introduction, just for you to know what it is. And I'm telling you, everybody that we did it for, they enrolled, never looked back, right? And they're only getting better, increasing their production. And if not MAPS, which is the KW coaching, find different source, whatever it is, but get a coach, get a trainer, right? Get someone you can model. Reach out to top producers, ask him questions, ask him for lunch, whatever it is, just to learn from the best. Between our offices, we have the 5 offices, we have about 1,300 agents. There's got to be one person, right, that you can reach out and connect and say, Lena, how are you? Great. Can I buy you lunch, coffee, something to hang out and just learn something from you? Ask you some questions. She's gonna say yes. At least right now, Patricia's gonna say yes. So you're welcome. Reach out. Number 3, remove or challenge limiting beliefs. Always. How do you know that you are hitting a ceiling of achievement or you have that limiting belief? When you show resistance. No, this is cannot work. I tried that. She told me, he told me, whatever. Okay. So always challenge yourself to remove, right, your limiting beliefs all the time. And if you cannot do it, seek help, right? Ask someone that, hey, hold me accountable for this, train me for that, ask questions. So the bottom line, never be too comfortable. Number 4, shape your mindset with vision and goals, right? Stephanie will talk about smarter goals after me, and you can break it down to science basically, right? But you also want to have both vision, right? Which is manifesting exactly what you want. You want to envision it. You want to have the ability to taste it, to see it, right? Like it's actually here, right? If you have a vision board, great. If you don't have one, make one, right? I know that some of the offices are getting ready to do vision board sessions. Some of them already did. So always have that, and of course have the goals. We'll talk about it in a few minutes. Number 5, know your purpose. And just kind of to better explain that, Stephen Covey, a great book, by the way, if you didn't read that, The 8th Habit, is breaking this down to 4. Ask yourself 4 questions. Number 1, or A, what are you good at? That's your mind, right? What are you good at? Number 2, what do you love doing? That's your heart. Number 3, what need can you serve, right? What need can you serve? That's the body. And number 4, what is life asking of you? What gives your life meaning and purpose? What do you feel like you should be doing? In short, what is your conscious directing you to do? That's your spirit, right? So if you can answer those questions, you can define them, then you know your purpose. And if you know your purpose, you connected to your inner self, right? You're it, as I said, and you can definitely function on a higher level because you're not questioning yourself, right? You're not doubting yourself. You purely fully connected to what you do, and nothing can cloud that drive. No weather, no judgments, no anything around you. Number 6, protect your mindset. Protect your mindset. That's a big one. Only use positive words, positive affirmation. When you talk to yourself, talk to other people all the time. And if you have those bad habits, like most people do, right? Have or do, stop it. It's as easy as anything else, right? But it's the worst habit that we have. So pay attention to that. Number 2, manifest, right? Envision, visualize what it is that you want to become and what is it you want to achieve on a daily basis. Make it look like or feel that like it's like you're already there, like you're already doing it. You already have it. Use words that evoke strength and success. That's back to positive words and affirmations. So I'm just trying to move my thing over here so I can see that. There we go. Practice positive affirmation. I spoke about that. And once again, Michelle Brown, 7 a.m. every day. Look at the training calendar. Believe you will succeed. Believe you will succeed. You have to believe that what you're going to do is going to work out. Otherwise, you're going to, once again, you're going to fall in the trap of that, self-judgment or criticism, and you're not really going to pursue it. So you have to believe in yourself more than anybody else. And lastly, give yourself credit. Okay, give yourself credit. Celebrate success. Tell yourself how great you did. Tell others, and keep that going, because that's the news. That's the PR. And if you guys go on social media, are you looking on the nasty stuff, or the bad stuff, the negative stuff, or you're looking for whatever gets you excited and motivated, right? So pick a side. Moving on. This is the basic formula, the economic model from the MREA. And once again, once I'm going to do the follow-up email, I'm going to send the link to that Google Sheet. So you can basically, all this, the blue fields over here, you can plug in, you can type in all the different parameters, all the different numbers, and you can say, like at the bottom over here, this is the GCI, gross commission, I want to make the next 12 months or 2022, etc. And then you can plug in on the left, the seller side, buyer side, right? All the numbers, conversion, average sales price, commission average, breakdown per side, and put your cap as well, and then see how much you're going to net. We always, by the economical model, we always factor in that it's going to be about 30% expenses, 30% or so cost of sales, and then you get your net home, right? So here you can basically plan strategically the next 12 months, right? Exactly what you want to make. It's going to break it down to science, how many listings you need to have appointments, and how many to take, and how many to convert to sell in order to get that final product and send it with buyers. I know I'm going fast, but I'm just going to give it the highlights, and the follow-up email will get there. And this is as easy as to plug in the numbers and play with this. And before Stephanie, last thing that I have to share is the 411, which is the business planning, right? You can make it as simple and easy as just write it down on a piece of paper, right? 1 to 5, 1 to 10, 1 to whatever it goes for the year, or make it more, accountability intense, and you're going to break it down the annual goals at the top. That's the one, and then each month, which is another ones, and then the weeks. Okay, so 1 month, 1 year, 1 month, and then 4 weeks, basically, or sometimes 5 weeks, depends on the month. That's how you break it down, and so you know every day what to expect. From here, what you do, you take all this breakdown, and you put it on your calendar, right? On the daily calendar, because if it's not there, you'll never do it. And you can think of it, yes, this year I'm going to make this year, close 10 sales, make 10 million volume of sales, etc., etc. But if it's in your head, it's not really going to happen because you're not doing anything daily that will take you there. So far, so good. So that was me, 10 minutes, 11 minutes with an accent, really fast. Stephanie, what do you have?
Okay, so I know that you guys haven't heard about this before, the SMART or SMARTer goals, right? So are all of you setting goals for this current month, for next month, to end up the year strong, and then also to start 2022 off of the bang? So let's go right into it since I have like 2 minutes. I'm kidding. So SMARTer goals. So it starts with the S, specific, right? You guys need to get specific. You need to have complete clarity on this. No ambiguity. No, don't be vague. Who is involved in this goal? What do I want to accomplish? Where is this goal to be achieved? When do I want to achieve this goal? Why do I want to achieve this goal? Get specific, okay? Because if you're not clear, then you may be a little frightened about what you'll get in return, right? So always be specific. So measurable, right? It must start with measuring progress. So if there's no criteria, you're not able to figure it out. Is it measurable, right? I always talk about tracking your numbers. So how many, how much? How do I know if I've reached my goal? What is my indicator of progress, right? So you always want to be being able to measure it. Now, achievable SMART goals, right? A SMART goal must be achievable and attainable. This will help you figure out ways you can realize that the goal and work towards it. So do I have the resources and capabilities to achieve the goal? If not, what am I missing? And have others done it successfully before me, right? So then you can always have, okay, is this achievable? And then you can always have your stretch goal, right? You can have, hey, you know what? This is what I want to accomplish, but hey, wouldn't it be awesome if I did X, Y, Z? Okay, then the next one is realistic. So a SMART goal must be realistic and that the goal can be absolutely achieved, right? Is the goal realistic and within reach? Okay, is the goal reachable given the time and resources? And are you able to commit to achieving the goal? What do you think the most prominent word is in that question? Commit, right? No toe dippers, nothing like that. We fully commit, right? And then timely. All goals should be time bound and that it has a start and finish date, right? I was reading, anyway, if you have a deadline for certain things, you can have little deadlines in between for the year, right? So, because every time, like right now, we're rounding up on the end of the year, right? So we want to make sure, okay, we want to get this in before the end, before the end, before the end. So just continue to look at that. Does my goal have a deadline? By when do you want to achieve your goal? And then the next one is enthusiastically, right? I can't read the R. Enthusiastically, because that's not on my sheet. Hold on a second. Are you enthusiastic? Are you committed? Are you excited about the goals? Is it something that you enjoy? If you don't have that passion and that excitement, flip and forget about it, right? Just go ahead and maybe have a goal, a different one that gets you excited and enthusiastic. What's the R? I can't read it. What does the R stand for? Help me out here. I can't see the whole thing. What is the R? Reward. Golly, everybody. That's the best part, right? So you want to make sure that you reward yourself, right? So even throughout the year, have little celebrations, pat yourself on the back. We have parties, right? Go give yourself a massage, do a shot of tequila. I don't care, whatever that reward is for you, then do it. Like at the end of each quarter, perhaps do a 3-day weekend. Say, you know what, I'm going to get away, reflect, reward, and enjoy, right? So there are your smarter goals. So go crush it, you guys. That's me.
Good job, Stephanie. Thank you. That was awesome. That was smarter on steroids. Yeah. Thank you for sharing that. And up next is Simon.
Hey! Now, can I get a woo? Well, for me, it's a little different, guys. The fundamentals of problem solving, right? Can you hear me okay?
Yeah, you're good.
Okay, good. We got to start the year strong to end the year strong, right? That is one of the core fundamentals that I truly believe. Now, with everything that we are providing you, business planning is crucial and very, very important as we close 2021 and open up in 2022. But for me, also the dynamics of understanding problem solving. For the ones that, jump on the Wednesday producer's mindset, I'm all about figuring out solutions, thinking outside the box, right? Involving of how you can diffuse, de-escalate, and ultimately make it a win-win for all parties. Part of that is the leadership that each and every one of you have, and the problem solving go hand in hand. You've got to identify and define the situation, right? Nip it in the rear. If you were on my producer's mindset on this past Wednesday, I was talking to you about knowing how to communicate, right? Communications. So that is part of 99% of the issue that a lot of real estate agents unfortunately do not communicate, and that's where it goes sideways. You got to know how to narrow down the problem as fast as possible. You know, real estate is dynamic and it's very, very lucrative, but also there is hurdles and challenges and obstacles, right? And walls that you'll end up hitting. But here's the big picture. If you are a transaction engineer and you think outside the box, here's what happens a lot with real estate agents. Agents see things from the inside looking out. But let's have a bigger perspective and look at things from the outside looking in. Now you get to see a bigger scope and identify the problem before it becomes a huge, huge problem. So in essence, you know, you gotta focus, you gotta identify and narrow it down. Because at the end of the day, it's all about winning, right? Getting the deal, closing the deal, and everyone is happy. Now, is there gonna be challenges? 100%. Is there gonna be obstacles? Of course there is. But bringing the right people, the right support, right, is definitely the alignment that sometimes we all need. Believe me, even for team leaders, we need guidance and support as well. So it's okay. Take the pride out of the way. Okay, identify the situation. Create a step-by-step angle of attack is one of the elements that I definitely seek when I'm trying to resolve a situation. Okay, what is the problem? How do we identify that problem? How do we can make this a situation where we can create the win for all parties? Remember, it's not about who is stronger on this and the King Kong effect that I always talk about. It's really, how can we all win together? Because there is a buyer, there's a seller, there's agents involved, and everyone wants to close the deal, right? Now, you got to bring the right people as well. You also got to understand everything is all about urgency. Many is a perfect example of urgency, urgency, urgency. Don't prolong it. Don't lag it. Get it resolved immediately. That's one of the fundamentals and the guide that you need for problem solving. The cool thing is you're amongst other agents that have probably gone through those challenges. And knowing how to just come out and say, hey, I have a situation. Have you been involved? Guess what? Your broker, your team leader, your colleagues, your escrow, your lender, okay, have probably gone through some channel and some challenges. Ask for help. Believe me, we're all here to help you. Try to approach the situation in the most level-headed avenue without getting the emotional aspect. Here's the problem that I see with a lot of real estate agents. The emotions gets the best of you. And when that happens, it's game over. Instead, take 2 steps back, and maybe it would be best if you just do not respond immediately. Let it sit and simmer for a while before you send a text, send an email, or respond on a phone call. Give it some time to cool down. Guess what? That helps a lot. There's been times where agents want to immediately send out a text, and you may say the wrong thing, or it may come across in a wrong way, right? But what if you just let it overnight? And now it gives you some time to really think and identify how you're going to approach that text, that email, or that phone call. So I encourage each and every one of you on this call and the agents here in my office is take 2 steps back before you move forward. I know there's a fire. Do you want to jump on that fire immediately? Or do you want to take steps to analyze and see if there's another angle that you can approach it to eliminate before it escalates to something bigger? Obviously, the biggest one that I'll finalize is working on your communication skill sets, right? The better you are at handling disputes, squashing the problem, identifying the issue, bringing the right people will definitely help you win. Okay, so with that, have an open mindset, and let's make 2022 a phenomenal year for all of us. That's all I have, Benny.
Awesome. Thank you, Simon. Good job. As always, I hope that you guys made some notes to yourself. And once again, this is recorded, so we're going to share the session afterwards. A lot of stuff to consume. Up next, Long Beach.
Yes, we're here. Come on up. Yep, come on up.
Thank you, thank you, thank you. And yeah, I have them come closer to the screen so we can
Yep.
see them. Is this Louis?
Yes, right here.
Louis Vasquez, our CPA.
Yes,
Good to see you.
sure.
Looking good, Louis.
Camera right there. There we go.
Okay, so Louis, good to have you. Thanks again for driving down to Long Beach and be there in person and share with us a lot of good content. I have one of your slides over here. So take us the next, 20, 30 minutes, right, to whatever content you have and, whatever questions that you might have. So all yours, my friend.
Hello, everyone. My name is Louis Vasquez. I have our PDF here that's available, everyone here as well. I have our contact information at the bottom, our Instagram handle, our office cell phone, so you can call or text us. And then I have Erin, our office manager. She'll get back to me as soon as possible. And I have our new CPA, tax and accounting manager, Ton, whose email address is also listed. If you email your front desk, they'll be able to get in contact with us with Erin, and we can send this to you directly as well. Or you can email Erin directly if you guys want to. Manny, if you just scroll down a little bit. If you just scroll down a little bit on this page, Erin, Manny, that'd be great. Just so I can see Erin's email. Long story short, ask your MCA or front desk, and we'll be able to get this to you, okay? Yeah, so let's go to the second page. Second page is just something that you'll have as a resource. Go to the next page. It's page 2 is most common question we get, what can we deduct, okay? That's the first thing, all right, is setting up those chart of accounts and actually knowing what's a tax deductible expense and what's not. So that's what page 2 is 70 of the most common tax deductions. A lot of times, new business owners that are trying to really make money, they'll come to us and their expenses will be light. And we'll say, hey, take this, redo your accounting. This is a great guide for you going forward, a chart of accounts to know every single tax deduction in alphabetical order that's available for you. The next page is something that Mandy kind of showed you guys originally. It's a kind of a tax cash flow tracker for you. So for example, if I made $25,000 on a listing transaction and assume the listing transaction was over 30 days, I have for you what you want to keep track of as far as taxes are concerned, so you can kind of calculate how much should I be withholding from each transaction, because that's the biggest thing, right? As business owners, we're responsible for that aspect of withholdings. Employees, it's all done for them through payroll. Business owners, we have to do that on our own, okay? And I don't think all of us went to accounting degrees and got accounting degrees and became CPAs, okay? That's why 45% of business owners owe the IRS at least $1,000 in back taxes. And then for real estate professionals, going as far north to Ventura County, going as far south to San Diego County, and going as far inland as San Bernardino County, in that area of Southern California, it's an 80% threshold. 80% of agents owe the IRS at least $1,000 or more. And this is something that's been working for us in terms of having agents accurately calculate so they don't become part of that 80%. So you can just see what's available for you in terms of deductions. So on this $25,000 listings, very likely what I will have spent after the brokerage fee, all of your expenses in terms of operating that listing, I'll very likely will have spent just shy of $11,000, okay? So the gross profit, you want to calculate that gross profit on the listing, that's what you withhold from. So on this transaction of $25,000, after I've done the accounting, I will have had a gross profit of $14,000. I want to withhold 30% of that number. So I want to put aside $4,300 from this transaction because that's essentially my tax liability on this transaction. And then I have the net profit of what I actually get to take home. And then you factor in your personal expenses. And you can see how quickly those go away as well. So this is just something that you can utilize. On the next page, I have if we go to the next page, I have a blank one. So email us in and we can send this to you. So that way you can use this on the listing transaction. When you're representing the buyer, the expenses is really just how much gas and mileage you're spending. Outside of that, the listing side of things, that's when you're really absorbing expenses. So something that's beneficial for you guys going forward. Okay. What I want to talk about is incorporating. When to look into this and when does it make sense and what does incorporating do? Okay. This is a 2018 tax return. All right. I know it's a 2018 and we're in 2021, but in 2018, they had the tax return set up. Their goal was to have it in one page and they actually did it. Unfortunately, that lasted for just 1 year. Okay. Now the tax returns are back to multiple pages. So 2018, they try to do it all on one page. And what I wanted to notice is line 6, someone without an S corporation. Okay. When to incorporate. All right. If I'm operating without a legal entity, okay, I'm in a situation where at line 6, my total income for the year was $125,000. I'm a producer. I'm making money. Okay. Well, you can look at line 22. You can see your total tax. Okay. Your total tax is going to be $32,000. So this is to prepare you. This is real. This is something that's gone out. This is something that's happened to people. Okay. On $125,000 of profit, without an S corporation, I'm going to owe the IRS $32,000. Okay. And this is before the state of California takes their 10% bite out of you. Okay. So this is when you want to start looking at, I would say the threshold of about, if I'm profiting about $50,000 a year, that's when I really want to start looking into it. Okay. Anything over $50,000, you're doing yourself a disservice by not operating your business through an S corporation, incorporate, not as an LLC. Okay. LLCs do nothing for you in terms of tax savings unless you convert that LLC to an S corporation. But the S corporation, the small business corporation, its impact can be significant. So we'll go to the next page. Okay. Next page, I have an example of a tax return with an S corporation. Okay. Line 6 does not change if you look at a side-by-side comparison. When you're looking at this, watching this later, or reviewing, we're still showing $125,000 of income, but we're showing it differently. Okay. We're showing it that my S corporation paid me a salary of $40,000. And then the remaining balance I took as draws. I just basically transferred the remaining balance from my S corporation bank account to my business account. So we're still making $125,000, but we're showing it in a tax strategic manner through the S corporation. And now line 22, you can see how much you owe. You're only going to owe $17,336 compared to the prior page when it was $32,000. So how did I do that? How did I go from one situation, someone's owing without an entity on $125,000 of profit on the prior page, they owed $32,000. Now I have the exact same situation, total income of $125,000, and now they owe $17,000. How did I do that? Now let's go into the next page and I'll kind of explain how this all works, because this is the ultimate loophole for business owners, the almighty S corporation. All right. And we need to understand how payroll works first. And I'll take 5 minutes on this, 5 minutes on the S corporation, a little bit more, and then I'll go over one other strategy that people typically pay for, but I'm going to give you guys it for free since we love Keller Williams so much. So payroll, let's say an employer is paying an employee $1,000 a week. Okay. I'm sure everyone in this room at one point used to be an employee. Okay. Well, whenever money is exchanged from the employer to the employee, okay, there's a tax on that event. It's called payroll taxes, also known as FICA, also known as Social Security and Medicare. Medicare and Social Security gets taken out of our checks to fund Medicare and Social Security, okay? And it's a 15.3% tax, okay? So when $1,000 is exchanged from the employer to the employee for payroll, there is a payroll tax of 15.3% on that transaction. And that tax is shared. The employee, it's just taken straight out of your checks. It shows up on your withholdings as FICA, if you can remember those days, all right? The employer is responsible for the other half, okay? The employer is responsible for the other 7.65%. And the employer, they pay the $1,000 and then they have to pay in the payroll taxes another $76.50. It just comes out of a payroll whenever we run payroll, okay? So a 15.3% tax imposed when money is exchanged from the employer to the employee. Payroll taxes, FICA, Social Security, and Medicare, okay? Now, when you're self-employed, okay, you are both the employer and the employee. So you are now responsible for both sides of this tax. You're responsible for the full 15.3%. So you pay this. This is called the self-employment tax, okay? I owe federal taxes, I owe state taxes, and I will also owe the self-employment tax. And we'll go into this next page, Manny, and kind of just show you guys a comparison. So I just have a breakdown here, okay? Someone making $100,000 a year. Let's say I have no entity, I'm a sole proprietor or an LLC, that's on the far left side. I made $100,000. That self-employment tax, that 15.3%, just that alone is $15,300, okay? Just to fund Social Security and Medicare, that very likely for me, my generation won't even be there, okay? So that's a lot of money going into that avenue, all right? Then assume a federal bracket of $15,000 and a state bracket of 5%. In total, I'll owe about $35,000, which we essentially saw on the first page a couple pages ago on that tax return that I showed you guys from 2018, okay? In the middle is that almighty S corporation, and I'm explaining how it works, okay? On that $100,000, you're gonna pay yourself a reasonable salary of 40 grand, okay? You're gonna take a salary from your S corporation. You're paying yourself a $40,000 salary, okay? And then the remaining $60,000 of profit that I have, I'm simply just transferring that over from my business corporate account to my personal account as draws. The fancy accounting term is distributions. So I'm splitting up how my profits are being paid out to me. I'm paying myself in a tax efficient manner through the S corporation. And what happens is that self-employment payroll tax, it only goes against that salary I pay myself. I don't pay it on my full profits. So I only pay the 15.3% payroll taxes on my $40,000 salary, not on the full $100,000. And in this example, as you guys are looking at, or we'll be reviewing at another time, this essentially would save you $9,200 in payroll tax, self-employment tax. So the S corporation, this is what everyone uses once you start making, again, I would say about over $50,000 if I'm doing that. That's why I want to look into it. Maybe talk to someone. Hey, I'm making money. I'm a business owner. I'm about to hit 50 this year. Definitely when you're at that 75, 80, $100,000 threshold, if you're somewhere around there, you should have got the S corporation yesterday. But this is how it works. This is how you save. This is how you save $9,200, $10,000, $15,000, $20,000 like we looked at in the prior example. That's how we do it. It's through the S corporation entity, okay? Just in the interest of time, I want to go over Manny, if we can just jump to page 10. This is kind of the fun stuff, if you will. In this handout, I have more tax tips. What's better, leasing a car, buying the car? What can I do with expenses to lower my taxes? There's different tips you can utilize that are in there that are very easy to implement. This is something that actually just got withheld in court. So this is something that I read about and just learned about, and now I'm starting to tell people about. This is a strategy where your kid, if you have a child-aged kid, either they're in college or they're working an entry-level salary, whatever it is they're doing, I'm going to assume they're in college. What you can do to cash in from a tax perspective on them going to college, what you want them to do is take a business class. They don't need a minor in business. They don't need a major in business. Something business related, marketing, finance, accounting, an intro to business class. Okay, so they have now taken a business class and they have the ability to give business advice. That's essentially how the government's viewing this. Okay, so your college age child, someone over 18 is essentially where you want to use this, someone with a business class under their belt, have them set up a S corporation, okay, a business advising corporation, all right? And you're gonna essentially use your child's social security number and standard deduction. You're gonna shift income. You're gonna pay your kid for their business advice, okay, their business management. And in the court case that I read about, they were getting paid $2,500 a month. So over the course of a year, $30,000. Went to their S corporation. They took reasonable deductions. They deducted the kid's laptop. They deducted the printer they bought. So regardless. So I have a breakdown of how this could potentially impact you and save you $10,000. So assume you didn't do this. I made $100,000. I get the standard deduction of $12,550. My taxable income is 88 grand. I would owe about $27,000. But you can see next to this, I have the breakdown of how it would work. You would now have a new deduction on your books for $30,000, and then that would then get transferred to your kid's social security number in S corporation. They would file a tax return, get the standard deduction, and only owe about $2 grand, $1,800 on that 30 grand, compared to you being in a potentially higher bracket, 30%, where you would have owed about $9,000 on that 30 grand. So I have the breakdown here, how to do it, what to do. We usually, once we see the college age kids, we start advising this and we charge for this, but you guys have this blueprint for yourselves going forward, okay? So that's kind of the meat and potatoes in 20 minutes, I think, Manny. Again, you can go to the first page. We have our contact information. You can email Erin right now and she'll send this to you on the first page. And then if you have any questions, feel free to reach out to us. And if not, you know, this is at least a guide for you guys day to day from the tax side of things, what you can utilize as essentially we're business owners, we're all entrepreneurs here. All right. Thanks, Manny.
Louis, good stuff. So a few questions on the chat over here.
Okay.
And once again, whoever's watching, I know it's a very condensed, intense, high level information. You can go back to watch the recording, but at the same time, you can reach out to Vasquez and team, and they're gonna, you know, advise you or you know, set up a time to meet and get the right information. First question over here: what was the threshold annual income recommended for starting an Escort? I think you already mentioned that.
Yeah, you want to have profit after expenses of about 50 grand. So you're probably gross commissioning about 80, 90. And then after you go through all your expenses, you're at about 50 or so, 50, 60 of gross profit.
Yeah, and that's as a 1099 income.
1099, right, correct.
Right, okay. Another question is, good question is, what is the best time to become an S Corp? After you make the money or before you file?
Yeah, so you need to have the entity in place before you file. So let's say for 2021, you know, unless you have like 50, 60, $70,000 on the way plus, it really probably wouldn't make sense for 2021. We'd have to like kind of look, but we couldn't set up the S Corp today and then put all of the activity from January up to October on a tax return. That's gonna trigger an audit. The only thing you could do is if you already have an existing LLC, you can convert that LLC retroactively. But you know, this year we're pretty much into Q4. You know, maybe if you have money coming on the way, but if you're making money and you have the client list and you're producing and you know, you're making the money, that's what you have projected for next year. You know, if you're projected anything above 75, 60, 75, 80, 90. Yeah, you probably might want to look into it at the beginning of the year and then maybe pull the trigger maybe later. But that threshold is really around 75, 80 is when you really want to pull the trigger, start looking at it about 50.
Right, okay. Question, any impact on ability of getting credit later? S Corp. I'm not sure if it's a complete question, but
it takes time to establish that that business credit. So like it took us about 3 years of activity with Bank of America before they even offered us a business credit card. So it usually takes time. Typically, if you need credit in the beginning, they're going to use your personal credit as collateral. So just be aware of that. You could get business credit in the beginning, but they're going to use your personal credit as collateral. And when they start asking for just for business, when there's no personal collateral that needs to be given, it took us about 3 years. And within 3 years, I was, you know, typically about 3 years of activity because that's essentially what they're looking for, which is similar to kind of a residential loan.
got it, okay.
Good question.
When does it make sense to have a C Corp?
A C corporation. Okay, so a C corporation, that's typically something you'll want to utilize if you're a big business. Like in order to be publicly traded, you have to utilize the C corporation. The C corporation, you only want to use it if you're required to use it, because C corporations open you up to double taxation. The corporation pays tax, and then you personally, you pay tax as the shareholder. The S corporation, which I went over, the small business corporation, that's what the S stands for. It's a small business corporation. That only pays one tax. Only the shareholders pay a tax. The corporation does not pay anything. C corporation, corporations pay, and then you purchase those double taxation. C corporations, you have to convert to a C corporation when the small business has over 100 shareholders, or if you go publicly traded. So that's the only time really a C corporation makes any sense.
I'm going to step in here because it's not relevant. So, whoever asked this question can reach out to Louis directly. Two questions about Louis, about the having the kids, a child part of so the first question is, does my kid need to have a college degree, or is it enough just to take one random business class?
Yeah, if they just have one class that they've completed, that's essentially what all the IRS used. That was all the IRS took in their favor, was the one class. They did not require a certification. They just required one relevant business class.
Great.
So
Okay.
smart. That's so
And then
smart.
what is the maximum age for college student child credit?
I believe it's up to 24. As long as they're at least a part-time student, you can take them up to 24. You want to use this strategy of paying your child this 30 grand plus potentially. You probably would want to use that with your child. You can use that up until the point they're making about 100 grand a year. It would still save you money up until that point. After that point, it doesn't make any sense.
So if someone is 24 years old, it doesn't apply anymore. That have to be until the age of 24.
Until the age of 24, correct. After 24 and no more.
And you cannot do it retroactively.
Can't do it retroactively, unfortunately, no.
Okay. And last question, are two businesses accounts recommended? One is Escort name and one bank account to transfer dividends into?
Yeah, you can do that. You can do that, or you can just use one. Typically what we see is they'll have one main business account, and that's pretty much it. Sometimes for the bigger businesses that have 15, 20 employees, they'll have an additional payroll account. But really, it's just that main operating account that you're using. Whatever's left over, that money's yours. You're just actually showing a transfer from that corporate EIN bank account to your personal account. That's essentially what they want to see. It's just a transfer of whatever funds you want to take. You can take as much money out of there as you want. That money is yours. You just need to either take it out through payroll or take it out through a transfer.
That doesn't count as income.
Louis Vasquez.
It would come out of income, but you're saving the payroll taxes on it.
All right, Louis, thanks again. Awesome information. Thanks for your time. Good to see you virtually. Long Beach. Enjoy Louis as much as you can, and we'll talk soon. Louis Vasquez, our CPA, awesome job. Thank you so much. And now let's shift to the Calabasas office. We have Doug Pitts. Doug is an MREA agent. You got the hot seat, Doug.
Red seat, yes.
Yeah, the hot red seat. So Doug, thanks again for your time. You're a busy guy, that's for sure. 10 months ago, Doug did a little kind of draft, right, that he's done every year with his annual goals, and one of them was to increase commission earned this year and to increase, more activity on his investment properties, which we're going to talk about in a minute. And he crushed it on steroids this year. So Doug, talk to us about first of all, how soon did you start to invest in real estate? And then take us through that kind of mindset of Doug Pitts today. How you think, how do you hunt, how do you do the whole math in your head, or the approach about what's good to invest in and maybe hold, or maybe invest and flip?
Well, I like to speak to the newer agents, not the agents that have been around for 20, 30 years like me. Real estate investing, when I was 20 years old, I started real estate. I bought my first house at 20 and I still own it today. It's a rental. And then I bought my next house at 22. I still own that today. It's a rental. And then when you're a younger real estate agent, you have an advantage of living in the property and getting an owner occupied loan, living in it a year, buying the next house, owner occupied loan, living in a year, buy the next house, owner occupied loan. You can do that 10 times legally if you're legally living into it. So real estate agents investing is completely different than any other person investing in real estate. And people just don't realize it. For us, every single house we should buy every house we ever listed or everything, you'd be retired immediately. But how we look at real estate investing is you're a real estate agent, that's your primary business. So you get to write off all the losses, everything. Most people can't write off all the losses. They can't write off certain things. Most people look at it as, oh, I bought a house for $500,000 and my payment's $3,000 a month and I'm making $3,200. So I'm only making $200 a month. Oh, that's not true at all. You got depreciation. So you're taking the depreciation, 27.5 years, you divide that into what you bought it for, you get to write that off a year. That comes right off your income. You go ahead and you get appreciation. So the house is at 500,000, you go to sell it in 10 years, it's probably worth 800,000. There's 300 grand. Divide that into 10 years of income. So you're writing off the house every single month on the depreciation. You're getting appreciation, and you're getting $200 a month income, which is going to be completely clean. That's free income, paying no taxes on it because you're depreciating the house in 27.5 years. So you want to break even, really, so you have a big old loss, because all of a sudden, I remember when I first started real estate, I think I was making 20 years old, $150,000 a year. And I'm like, oh my God, I have to pay $60,000 in taxes. Nope. At that 150, I go ahead and write off my rentals. I write $35,000 worth of losses. Then I'm down to 120. Then all my other BS bills, I get it down to 80. And then you go ahead and have a defined benefit. You put money away in your retirement. All of a sudden you're down to 50, 60,000. You're at 10% income, income tax, and you're paying nothing. And that's why having rentals legally cleans all your income, a lot of your income away. You just have to have the stomach for it, as in it might be vacant a couple months, it might need a new roof, but every time it's vacant or needs a new roof, that comes right off your income. So right now, us real estate agents, we pay 50% taxes. So if you spend $2,000 on a roof, that comes right off your income, but later your house is worth that much more because you fixed it up. So you're saving money. And then people go, oh, well, Doug, when you sell it in 10 years, you're going to have $300,000-$400,000 worth of income. Well, then you 1031 it because you don't live in it anymore. You turned it into a rental. And then you just buy an apartment building and you pull some money out of the apartment building and get your money out of it. And that's all tax free. And then, you can take all the money out of it legally, refinance it and let your kids worry about the inheritance or the taxes. So they're still getting something. They should be happy. So that's why, if I could talk to myself, gosh, I wish I had anyone I could have talked to 34 years ago and tell me what I know today. My brain didn't open to about 10 years ago. I was always that person where I'm only going to buy one house a year. I'm only going to buy it where I can drive to it. I'm only going to do it when I can put 20% down. And I had all these stupid rules because I was so scared of not making the house payment. And, I had a young family and you're always scared because real estate is absolutely the hardest job in the world. Anyone getting real estate, you guys are all insane, every single one of you. To get into a business where every day you wake up and it's a brand new job, it's incredible that you guys do it. So you need to have the rentals to do it. So my goal now, how I think about it, is every time a house comes on the market, I go, can I make it a rental? So what I'm doing right now, this year I bought a 12-plex in Tennessee. I bought 2 houses in Fillmore. I bought a house in Simi. I bought a house in Burbank. And so I'm taking those 2 houses in Fillmore, already putting 2 ADUs on them, and they're on plan check right now. The house in Burbank, I'm putting an ADU on there. It's in plan check right now. And the one in Simi, I couldn't put an ADU on it. So right now there's a law out, which you guys already know about, is the ADU. So anytime you have a residential house, you can build an ADU in the backyard. So I look for properties that have side alleys, back alleys, corner lots, where I can give someone a front yard and a little backyard, a front yard and a little backyard. So I can rent 2 houses out and they're not really sharing anything. So I can get top dollar. I would never buy a house where it's on the main street and turn the garage into the ADU, because eventually people don't want to live on top. You're going to get apartment style rents. I want to get house style rents. So that's how I look at it. So every property, interest rates are so low right now. And if you don't own 10 properties right now, you need to buy as many as you can until you own 10 properties, because after 10 properties, you get a crummy interest rates. First 5, great interest rate. Next 5, a little bit less interest rates. And after 10, I'm like, I think I'm at 5% now, because I always keep at least 10 to 15 houses with financing in it. And then eventually I'll refinance 3, pay off 2, and then I try to get the number down again. Then I end up buying some more, then I get the number up again. Then later I'll refinance and pay them off. Your goal is to have them paid off, because the best mortgage to have is none, and that's your retirement. The house that I bought when I was 20 years old, I get $2,750 for the rest of my life. So every month I get that money, and I'm paying, I think I bought it for $110,000 back then. So the taxes are nothing. So how I look at it, when my kids were born, I bought each kid a house when they were born. So when they got into college, I could retire, I could sell it and pay for their college. By the time they got in college, I go, I'm making so much money on rental income, I'm just gonna use the rental income to pay for their college. Worked out better, and then I get the house. So it worked out a lot better that way. So as a real estate agent, you have to think about not the minimal money you're making per month right now. That's why I say younger real estate agents, younger into the business, you buy something and you want a nice loss because it comes right off your income, and then you pay less taxes at the end of the year, because we get completely thrashed on taxes. So if you can go ahead and wipe away $50,000 in taxes and you're building equity, that's the best way. That's true cash flow. So most people don't look at it that way. I look at it that way. Appreciation, depreciation, and then you get to write off everything, other things in the property too. And then people definitely, when you buy in different areas, then you can farm those areas and door knock those areas, and people are like, hey, I own a house in the neighborhood, and they kind of trust me well. So anything else, Manny?
What was that, gold or what? Right? Thanks, God, for that mindset and share that experience too. In a kind of nutshell, what's your formula when you look at the property and you say you're on the street in front of the house and you say this is a good investment or not a good investment? How do you take us to 5 minutes or whatever it is, that kind of mindset?
Well, unfortunately, it's always the numbers. So it doesn't really matter. Any house could be. I bought a house from Caltrans that they're going to build. They're going to take it away and put the freeway on ramp. They ended up putting a wall like right on the yard, and it's worth nothing. I gave them $200,000. Now it's worth $400,000. So that's a horrible house. Louder than loud. It rents out for $1,350. I don't care. It was a $200,000 house. So you never look at the house. You never look at anything. It's all about the numbers. If all of a sudden a house is $500,000 and it could rent out for $3,000, it's probably going to break even. If all of a sudden you can get it for $200,000 and rents for $300,000, then it's a great deal. So the house has nothing to do with it. It's all about the price and what you can rent it for. So you're always, oh, buy in a better neighborhood, buy this. Yeah, that helps with appreciation. But you always go by what can you get for rent and what you can buy it for and how much is the loan going to cost you. Because most of you guys will have to put 20% down. So you have to take that 20% down. So like a $500,000 house, that's a lot of money down. You have to put $100,000 down or something. So if you can buy it as a first time buyer or buy it as a primary residence, you can put 3% down, 5% down, no money down, VA, and that's how it turns into a better investment. So to answer your question, I don't care anything about anything. I don't need anything in front of the house. And someone calls me up and goes, hey, this house needs $20,000 worth of work, and it gets about $3,000 a month. I just back into it. I take the $20,000 down and my money. So I'm putting $200,000 down on a $500,000 house, and $200,000. On a $500,000 house, $100,000 down, I have $20,000. What's my return on that $120,000 I'm investing? So if all of a sudden I'm making $400 or $500 a month, that's pretty good. I'm getting, about 7% back on my down payment. That's all I care about, because everything else is the tax write-off. So you have to think about, if I lend somebody hard money at $100,000, I'm going to make $666 a month on $100,000. So if I put $100,000 down on on a house, I need to at least make $600 a month, because that's about 7.5%. So that's how I look at it. How much money am I putting down, and what's my return on my down payment, not on the actual value of the house. If someone all of a sudden goes to you, hey, Doug, I'm going to go ahead and carry the whole note and you can buy my house, and I'm going to give it to you at 2% interest rate. And I don't care what the purchase price is. In 30 years, it's paid off and my payment's this, and I'm collecting this. Great, I'll buy it. Who cares? If someone goes, I'm going to buy it for $1 million, but I'm going to carry it at 1%. I'm going to carry it at 800,000 and I'm going to do it 3%. At the end, it's the same thing at the very end of 30 years, as long as you never refinance it. And that's why right now it's such a great time to buy rental properties, because you're locking in this total low interest rate for 30 years. And you just have to be that person that's a long-term investment and you never refinance. And rental properties aren't piggy banks. You're never allowed to take money out of them unless you're buying another rental.
That question over here from one of the agents on the chat. For self-employed people, it can be hard to get the money or loan to purchase the first investment. What do you recommend? How would you go about that?
Well, your first investment is your primary residence, 3% down. If you don't have 3% down, you shouldn't be buying a house. I mean, that's not even reserved.
And for,
Yeah.
Okay, question?
Do you have any other bridge strategy at all? I just noticed you said you don't buy and reinvest that money. You never refinance.
I only refinance if I'm going to buy another house. And if I don't have if I have a great loan on it, I didn't ever refinance. I'll pull a second or something, but I usually don't need to do that. I usually refinance to pay off other houses so I can get new loans. So that what I did this year, I ended up paying like 4 houses off in order to get 4 new loans. And then I got 4 new loans at a great interest rate. And the ones I refinanced at a great interest rate, and I ended up paying those off, and so that didn't come forever.
Doug, can you repeat the question that they asked, because we couldn't hear it over here?
I think he said basically, do you ever refinance?
Refinance to buy another property.
To buy other properties? The only time you refinance is if you have a horrible loan or you have so much equity and the interest rates are at 3%. It's free money. It's literally free money right now. Because we know when I've been started in real estate, it was 10% or 8-9% interest rates. So it's crazy how cheap it is.
Other questions for Doug? Doug, as always, I mean, it's good stuff, and you know, thanks for making the time to educate the future generation and be generous with you know, sharing that your concept and whatever, however you wired back then and today.
But if you have a good friend, brother-in-law, whatever, and you guys want to go in house and start buying 10 rentals together, that's great. Both get 10 loans each, put money down, whatever. You can only afford 25% of a house, get 3 other people to go with you. Just have one agreement. This is a 10-year investment. If you ever want out, you only get your original investment back. If you do it in less than 10 years, it doesn't matter if the house went up in value, and you split all the bills and you split all the deductions. So if to answer your question, yeah, 3%, but most people have to put 5% down. Go 5% down each. That's 20% down, and just duplicate it. I wish I would have done that more. I own houses with like 5 different people now. People bring me houses. I go, you should buy it too, and I make them go in with me, and then they have it forever. And you just have an agreement, a tight agreement in the beginning, stating you're not. If you get a divorce, you only get your money, your original investment back. If you need money, you only get your original investment back. You just make it so painful that people keep it for 10 years.
Question. Why did you pass on the ADU and CME?
The ADU, he asked me why I passed the ADU and CME, because this house had a garage in front and had no side lots or anything else. So if I put an ADU in, it would be like 2 people living in a duplex or an apartment, and I wouldn't have got top dollar. I would have probably got 15 grand, 1,500 on the ADU, and I probably would have got, you know, like 2,500. And with the cost of doing the ADU and everything, I would have just lost money. It was better to get top dollar for it. I ended up getting 3,400 for the rental, which is our 3,300 for the rental, which is more money. But if other ones, as long as I can give them a backyard and a front yard and a parking spot, then I can get top dollar for both houses.
What's the square footage?
Square footage, I think, is up to 1,500. I've been doing,
that house.
oh, that house was, what, 1,400 square feet. 1,400 square feet. The ADUs that I'm building right now that are all on plan check are between 500 and 800 square feet.
And talking about ADUs, that's a great segue, Doug, to our next next panelist. Doug Fitz, you're incredible as always. Thank you.
Thank you.
Good stuff, guys. I have here next to me Florentine, Christian, Florentine. Yay! Such a good person. So you're gonna take over. I'm gonna stop share so you can share your presentation from here, slides from here.
Perfect. I will,
Yep.
I will share my slide from here. And I first of all want to say hello to the actual people that are in the room with me. Good to see you guys. And I met some of you guys pre-pandemic. I was right here in this room when Brandon Louder was the team leader. So good to be back. Good to be back. And also hello to the other market centers. It looks like we've got KW South Bay. We've got, who else do we have with us today?
Calabasas,
is with
West Side,
us,
South
West
Bay,
Side.
San Pedro, and Long Beach.
San Pedro and Long Beach, awesome, awesome. I think I know agents in all of those market centers. So very happy to get to spend some time with you guys today. So this is a perfect segue. Somebody just volleyed the ball right over to me in terms of asking about accessory dwelling units on investment properties. So I'm just going to take it away and go ahead and share my screen with you right here, so that we can get right into this presentation. I've got a lot of information to share, and I know you're hopping to get back to your hold on one second.
Hold on, let me give you a sharing rights, I guess. Second. Okay.
Okay.
Try again. There we go.
All right. Perfect. So it's not showing me. All right. It's right here. Okay.
Share.
Perfect. Perfect. Perfect.
We're in business.
All right. Can everybody see the slideshow screen? You're all seeing it? Okay. Perfect. Oh, we have to go back one more. Let me just get us all the way up to the top. You guys want to see from the very top.
You got it.
Perfect. All right. So I think most of the people in the room may already know me. Florentine Christian. My company is Sidekick Homes. We were basically founded with the intention to help families and local communities overcome the housing crisis. And we do this by developing accessory dwelling units. We call them sidekicks. And so we actually help people with the design process, actually building their ADU from start to finish. And then in addition to that, we also are a full service team of professionals who are here to educate and also guide homeowners through the process every step of the way. We know that now some people may already be developers and familiar, but most people building ADUs have never developed a project. Most have never even done a small renovation project. So we make sure that people feel comfortable every step of the process. A little bit about me. I previously was in real estate. I was a former team leader at a Keller Williams Market Center some years back. So I get your guys' reality and have tried to really, and I know that you guys are getting a lot of questions from your clients about accessory dwelling units. So I've really worked hard to create as many resources as I can to help busy realtors answer a lot of the basic questions about real estate. In coming to do sidekicks and segueing from real estate into construction, I'm actually going back to my original roots. I got my start, my very first job when I was 14 years old was working in the family business in construction. And by the time I graduated high school, I had experience in every aspect of residential home building, from pouring the foundation to installing the final finishes. That's a little bit about my background and how I came into what I'm doing now. So let's start really quick. I want to make sure that we all understand what an accessory dwelling unit is before we get started. A lot of times people bring projects to us that they want for us to build, which we're happy to build, but they're not necessarily accessory dwelling units, and they can't necessarily take advantage of all of the wonderful relaxed zoning rules that apply to ADUs. So let's just talk for a minute about what an ADU is and what an ADU is not. So first of all, when these came out on Amazon, people, my inbox got hit up. Everyone was DMing me with, hey, have you seen these tiny homes on Amazon? And I thought, what the heck does this have to do with me? But there is a misconception that you can buy a kit on Amazon and build yourself an accessory dwelling unit. And the reality is an accessory dwelling unit has to meet building code just like any other new home would, right? So An accessory dwelling unit is not a backyard office. It's not a yoga studio. It's an actual home. All right, so what is an accessory dwelling unit? It is a valuable form of housing. So it is defined in our California government code as a valuable form of housing. It is intended to create additional housing for family members, students, the elderly, in-home care providers, pretty much anyone living within existing neighborhoods. Right now in the state of California, we rank 49 out of the 50 states in terms of housing units per capita. So we have a major shortage. We're trying by the end of 2025 to build 3.5 million new units of housing, and accessory dwelling units are one of the vehicles that we have at our disposal to get that housing built. So an accessory dwelling unit by California state law needs to have 4 things, okay? And that's what this point number 3 is. It needs to have its own kitchen, its own bathroom, separate sleeping quarters, and a separate entrance. As long as it has those 4 things, it can be considered an accessory dwelling unit. So where can we build these accessory dwelling units? A lot of times people say, well, I live in the city of such and such. Are accessory dwelling units allowed here? Well, they're actually allowed everywhere throughout the state of California. These are the people that we've helped thus far in the Los Angeles County area, a few in Orange County, with their accessory dwelling unit project. So they can be built in any city within the state of California and on most properties. They can be built as a separate standalone unit, the detached ADU. You can convert a garage, whether it's detached or attached to the main house. You can carve out a portion of an existing house and have it be a separate accessory unit. And you can also attach an ADU onto an existing house. Now, these are all examples within the single family world. We can also build accessory dwelling units on properties that have multifamily structures. And in fact, you, in most cases, can build more than one ADU in properties that have multifamily structures. We're working on a project in Lomita right now. It's a 36-unit apartment complex, and we're going to be adding 8 accessory dwelling units in the tuck under parking, in the carport parking. And this was an investor who was needing to do some soft story retrofit on the project. And, we came in and we said, you know what, we can probably get the structure done for less expensive by building units, and then you also have additional rental income. So it actually worked. They have plenty of adequate parking for all of their tenants, so it's going to end up working in that scenario. So there's a lot of different variations in terms of where and how we can build accessory dwelling units. So what is the ADU craze about? If you've been in the real estate industry for a long time, you probably have realized, wow, this is something that over the last few years I've been hearing a lot about ADUs, and I didn't previously. So what's going on that has it be such a hot topic now all of a sudden? Well, it really has to do with a lot of relaxed zoning requirements. So what's happened is the state of California is basically telling local cities, yes, you can create your own local zoning requirements. However, they need to include certain allowances for people who want to build ADUs. And so that's forcing cities to actually loosen their zoning requirements. So for example, ADUs are allowed on most residentially zoned properties, single and multifamily. The parking requirements have been relaxed. In most cases, you will not need to add additional parking for an accessory dwelling unit. There also are limited side and rear yard setback requirements. So in most cases, you will not have to have a setback from the back or the side property lines of more than 4 feet on the property, in some cases even less. There also are limitations on requirements such as floor area ratio, lot coverage, and open space. You don't necessarily have to know what those are, but it's just important to know that these are things in the past that would limit what people could build on their property. Owner occupancy cannot be a basis, it cannot be a requirement for approval of an ADU from now until the beginning of 2025. And so that's why there's a huge opportunity right now with the multifamily and with investment or rental properties to get these ADUs built. As of 2025, we don't know if that will continue on or not. And some cities may institute an owner occupancy requirement. That's why a lot of investors right now are taking advantage of this window to get their ADUs built on their investment properties. There also are limits on fees and utility connection requirements. I know City of Pasadena had a $20,000 ADU development fee, for example, that on top of all of their other fees, it was just right off the top, and that substantially increased the cost for somebody wanting to build an ADU. So now there's limitations as long as you're building under 750 square feet. And HOAs also have to allow that. So that's as of 2020, the HOAs cannot restrict, they cannot disallow ADUs from being built. And then as of 2021, they also cannot have a blanket restriction on renting them out as well. So these are all of the things that have all of a sudden made ADUs a lot easier to build on people's properties. If we look at ADU development trends over time, what we can see is the development trends have been going up substantially as the new ADU laws have been going into place. And currently in Los Angeles, ADUs are making up nearly 40% of all housing building permits. So as of early 2021, City of LA was reporting processing upwards of 20,000 ADU permit applications. City of San Jose, so up in Northern California, they're also reporting that ADUs are making up 38% of all housing building permits. So they are a big part of what is happening right now in the built space. All right, so that's all well and good, but today you guys are at a business planning workshop and you're setting your goals for the upcoming year. You're putting your strategies in place and determining how are you going to make your gross commission incomes, right? So I want to talk to you about how you can actually grow your GCI through ADUs. So that this may be part of your strategies. You're creating your strategies. You might want to think about how do I incorporate ADUs for the near term, but also for the long term, as I'm looking at benefiting, growing my own income. And I'll give you a hint, all 4 of these things have to do with benefiting your client. So if you can help your client to earn more money or grow the value of their property, it will end up growing your income. So let's talk about these 4 ways that you can grow your GCI with ADUs. First of all, I think is the most obvious, which is increasing the value of a property with an ADU. Now, one thing that I will say is, if you're flipping a property, in most cases, an ADU is not really going to give you a high return, or there's not certainty that it's going to give you a high return in an immediate sale. What ADUs are great for, though, is increasing the income of a property. And so over time, as that property shows a demonstrated increase in income, we expect that the property value will increase over time. So it's not an immediate increase, but over time it definitely should be. And an increased sales price for your client obviously means a higher commission for you. One thing I do want to say right now, when appraisers are appraising ADUs, they're actually not considering the income from the ADU in most cases. They should be doing an income approach to their appraisal, but in most cases they're not at this point. I had an opportunity to speak in the last couple of months with the Federal Housing Finance Agency, and we, myself and many of my colleagues in the ADU space gave a lot of feedback to our federal partners at Fannie Mae and Freddie Mac with how they're putting their loan products together and how we're treating appraisals, so that hopefully in the future, this is not such an issue, that appraisals are not such a sticking point when it comes to the valuation of ADUs. So we're actively working on that within the industry, again, to help you guys out and to make it easier when it comes time to do your sales transactions on properties that have ADUs. All right, the second way that you can increase your GCI is to also demonstrate that a property has good ADU potential to potentially get more competition and potentially push that sales price higher. So right now, a lot of people are desiring that property with the accessory dwelling unit. And if they can't find it, the next best thing is to find a property that has good potential for developing an ADU. So it's really in your best interest to know what these properties look like. And I have a resource for you. We've developed a number of resources for realtors. We actually have a resource that walks you through what a property looks like that has good ADU potential and what you should be looking out for. But basically, when properties with existing ADUs are in short supply, ones with ADU potential end up being in high demand. So that's something important to keep in mind. If you're in one of those markets where this is something that your buyers are desiring, we can put together an ADU evaluation report for your property that walks through and lets you know what the ADU potential of the property is, where we think an ADU would be located, and does it make good financial sense based on, you know, local rental comps in the area. And this is the big thing. Everyone always wants to know, can I build an ADU? What is the zoning laws here? Is there anything on this property that might create problems or obstacles to building an ADU? When you have the report done, it gives the buyer peace of mind that yes, indeed, they can do what they think they can do on a property. So that can really help you to you know, get that higher sales price by demonstrating the potential. We have a property right now. The client, we had started to draw up plans for the client, and then they decided that they wanted to move midway through. So these beautiful ADU plans drawn, and the realtor actually had the plans out on the table as she was listing the property to sell. And there were clients that actually called us to get some more information about, you know, the ADU development on the property. And it was actually really beneficial. It was beneficial for people to see the potential of what could be on that property. Our property evaluations, they're only $300, and we take $50 off of that cost for realtors and also for your clients. So we're definitely trying to take care of you guys. All right, the third way that you can increase your client's income and or savings for future purchasing power, right? So we always want to think about cash flow, because your client's debt to income ratio is a big determinant of what are they going to be able to purchase, how much can they purchase, what areas of town can they be looking for a property. So there's a few different ways that an ADU can benefit your client's debt to income ratio. First of all, the most obvious, right? If you're wanting to rent a property out, if they're wanting to build an ADU so that they can rent it out, that will increase their buying power for their next property. We actually have talked to numerous people. The whole reason why they want the ADU is so that they can increase their income, so that they can afford to buy in a different school district, so that they can get their kids into a better school. That's the reason why they're building the ADU. And people build them for a lot of reasons, but that's, you know, one of the best ones I've heard. We also have seen a lot of people building an ADU for their adult children. So maybe they're not going to rent it out for rental income, but they're going to give their adult child who's either going to college or who is out of college and is just kicking off their career, probably with a mountain of student loan debt, giving them an opportunity to create some savings so that they can then have down payment money to purchase their first home. Right? And so if this is your client has these adult children, that might be a great conversation to have with them to see what they're, you know, start talking with them about their children and getting their children set up to make their first home purchase as well. And this can be a great way they can do it. And then third is helping people think about how they're taking care of their aging parents. A lot of times, one of the expenses that can put a huge burden on a family is the cost of care for senior living facilities that can be $5,000, $9,000, $15,000 a month. It can be very, very, very costly. Meanwhile, you can build an ADU on site where you can house your parents or your in-laws. They're not under your roof. They have independence and a little bit of separation, but they're also close by. And this can be not only cost effective, but seniors also thrive when they're surrounded with loved ones and a social network and a sense of purpose, which oftentimes grandchildren can give them that opportunity to, you know, play a really significant role in, you know, in the family. So these are some ways that you can help your clients increase their debt to income ratios and be in that position where they're able to make a move and purchase their next home or, you know, their first home more quickly. And then fourth is my favorite. What we're seeing is a lot of people who are building accessory dwelling units are people who may not have the resources to be an investor. They may not yet have the resources to go and buy their first investment property, but they might have the resources to build an accessory dwelling unit. With the expensive land costs, that's what drives our property costs up so high. It is far less expensive to build that accessory dwelling unit typically than it is to buy an investment cash flow property. And what we also know is that these ADUs are paying for themselves typically in about 5 to 8 years. In high rent markets, sometimes they're paying for themselves in about 2 to 3 years. So they're definitely, I mean, you'll have your ADU paid off before, if you had purchased an investment property, before that investment property is really even cash flowing significantly, especially if it's in a rent controlled area. So they're an amazing, amazing opportunity for people who want to rent them out. Again, as I mentioned at the beginning of this talk, they're not as good of an investment if you're wanting to flip a property. Number one, it takes time in some cities to get through the building approval process, to get approved to even be able to start building. If you're flipping a property, that typically doesn't make sense. And also the appraisals are one of our biggest sticking points. We don't really know how the appraisal will come in. Most of the time it's going to come in for less than what the initial investment was. So they're not a great, short-term investment, but they're a fantastic, they're one of the best long-term rental income investments out there. All right, so how can we help you? I am wanting to help you guys to take advantage of helping your clients with accessory dwelling units. We've really worked to create a mutually beneficial relationship with our realtor partners. And just as much as you're sending the business to us, we want to send that business right back to you guys. There was a realtor recently who she had posted on Nextdoor. Somebody had asked a question. One of her neighbors said, we want to build an ADU. And, who knows a good ADU company? And she put our business card up. So you have to call Sidekick Homes. They'll walk you through every step of the way. They're fantastic. So we actually ended up getting a business with one of her neighbors. And when that neighbor, after we finished construction, I think it was back in February of this year, after we finished construction, they wanted to rent the unit out. And they also were thinking about buying another property and doing it all over again. And so back when she had originally put on Nextdoor, when the client came to us and we said, well, how did you hear about it? She said, oh, from Nextdoor. And we said, okay, well, who was your friendly neighbor on Nextdoor who referred you? It turned out to be a realtor who was in our network. She was in our database. So we said, awesome. So we put her as our referral source. So then when it was time to help her, figure out what, give her guidance on rentals, et cetera, we reconnected her with that realtor. They had never met before. We were able to reconnect her with that realtor so that they could get some guidance on rental, and then also to start talking about their next property that they wanted to purchase and build an ADU on. And so it ended up really being a win. I mean, that realtor did nothing more than just post our business card on Nextdoor, and it really ended up coming back around, and she was able to get a real estate lead from that. So we definitely like to keep track of where referrals come from, and we like to, bless you guys back when you send people to us to build ADUs. We like to send them back when we know that they're ready to purchase the property. So we have created some resources for you on our website. Our website is sidekick.homes. There's no .com, it's just sidekick.homes. And we have a secret page that if you just go to our website, you will not find. So you might want to go there right now. It's a /realtors only. And it is an opt-in page that we have set up for our real estate professionals. And we have resources that we don't just open up to the general public. They're really meant to make you guys shine and have you look like you have an ADU knowledge base when you're working with your clients. So this is what is on, this is a portion of what is on that website. I'll actually, I'm going to pause this screen share and I'll just take you to the website and show you really quickly. Hold on, let's see. All right. We're going to not share that screen. Let me get into the correct page, and I'll just show you what some of the resources are that are available to you to really help get you guys all set up. Oh, I think let's see where they are. Okay, here they are right here. Okay, so let me get my screen share back. All righty, here we are. So this is our realtors only page, and then I'm going to walk you through and just show you what some of the resources are that you can take advantage of. So as you click on all of these tiles, for example, there is the ADU guidelines in the state of California that really walk you through all of the highlights of what the requirements are. Okay, so that'll give you a really great overview if your client has questions about ADU requirements. We also have one on how to list a property with an ADU or with ADU potential or with an unpermitted unit. How do you want to represent that? And what is the way that it's gonna, you're gonna be doing that legitimately? The MLS does finally have a property with an ADU tab, which is fantastic. We also have a resource for you on what to look for in locating a property with good potential for an ADU. So if that's what your client is looking for, what are the things you should be looking for to know if a property is a good fit? The last thing we want to do is come out when you guys have opened escrow and you're coming out and you want us to evaluate a property for your client, and we get on site and it's a really poor match for an ADU. That's the last thing we want to do. So we want to set you guys up to already find a property with good potential. And then when we come in and do the report, it already makes you look like a pro. We can come in and basically validate that, yes, indeed, this property has great potential. So this is a great place to start with these tips. We also have appraisal and lending. I mentioned appraisal is one of the biggest challenging areas we're having with ADUs right now. So we definitely want you to take a look at that. And then this right here is the Bible for ADUs. It's the Accessory Dwelling Unit Handbook. This is open on my screen daily. I reference it throughout the day, every day. So this is everything that you want to know about ADUs in the state of California. Most of your questions you'll be able to get answered here. And this is a resource that we have available to you on our Realtors Only website. And then the ABCs of ADUs is a great brochure that you can send to your clients. If they're just thinking about getting started with their ADUs, it's a fantastic resource. It's very well developed. It was put together by AARP. And so it's a fantastic resource. So those are things that are all available to you guys on the Realtors Only website. In addition to that, we also have, I'll just show it to you right now. We have an upcoming event it's a course called All About ADUs, and it is the required course curriculum if you want to become a certified ADU specialist. So we have a course coming up. The next one is November 17th. It's being sponsored by the Palos Verdes Association of Realtors. We will have one that's being sponsored by Greater Los Angeles Association of Realtors coming up in January. And you will find all of that information again on our Realtors Only page. That's just for guides for you guys. And then we're also working on putting together some local ADU guidelines so you understand what the local zoning requirements are for the cities that you're working in. So we're going to continue to populate that over the next several weeks for you guys. So that's that. I'm going to go back to my slideshow here real quick.
Good stuff.
There we go. All right, perfect. So that was pretty much, that's our Realtors Only page. Oops, let's see if we can get, there we go. Talked about our upcoming events. Perfect. The other thing that we can offer you is our ADU site consultation and property evaluation. And we offer that at a discount for our realtors and partners. So that is essentially, it's normally a $300 cost, but we give that to you for $250. It's great for when you're opening escrow on a property that your client thinks has good potential, if you're listing a property that you think has good potential, or prior to getting estimates for designing and building an ADU. That would be the other time to have us come out and do that for you. And we always take care of you and give you a $50 discount. So make sure if you have your clients calling us that they tell us your name. Again, it's important to us that we're taking care of our relationships with our realtors. And we also want to make sure that they get their discount as well. And then finally, we also do events for the general public. So just on our website, sidekick.homes/events, you can see upcoming events. We usually host a monthly event. We usually host a monthly event for the general public that is called Getting Started with Your ADUs. It's free. People love it. It walks them through the steps of what are you going to, what are all the cost considerations, timeline considerations, what are the things you need to start thinking about if you're wanting to move forward with an ADU project. All right. And then this is just a little bit of information about our All About ADUs course. So this is the one coming up September 17th. In the background is a little picture of an ADU that we completed just a few months ago. But this is what the registrational page will look like, and you can just get yourself registered. There is a cost for this course. This course is going to be $100 and it's $80 if you're a member of the Palos Verdes Association of Realtors. I think the one with Greater Los Angeles coming up in January, if you want to wait, we'll also have a discount for Greater Los Angeles Association of Realtors, and we're doing South Bay in December. So South Bay, I'm sure will also have a discount for members of South Bay board. So if you guys want to take advantage of discount, you can wait until your board hosts the events, and we will have all of those on our Realtors Only page for you to take a look at. And then you will have to pass a 50-question test in order to become a certified ADU specialist, and you'll get the logo that you'll be able to put on all of your marketing materials, etc. It'll really give your clients peace of mind that you know how to best represent them on properties that have ADUs or ADU potential. And that is it for my spiel.
That was so good. That was so good. So hold on. We do have questions. So
Yes.
what I'm gonna do is do this. Let's come back to my, just give me a second, guys, over here. Thank you. Oh, here's Paul. Okay. Awesome stuff. So questions for you. Be good. So first question is, let me just go back. Okay, can prefab tropical building or manufactured home be used as ADUs?
Yes, they can. And I'm actually a manufactured homes specialist as well. So if that's something that interests you, we can help you with prefab and manufactured homes. There are some considerations there. You know, definitely need to make sure that the property is a good candidate for prefab, but yes, you can. There are prefab ADUs. So that is a great question.
Thanks, David. What are average typical price points to build? Good question too.
Yeah, that's a fantastic question. And one thing that I will always tell people is when you're thinking about cost, there's so many variables that go into a cost that you know, every property is going to be a little bit different. That's like saying like, oh, in LA County, what are the prices of homes? Well, depends on a lot of factors, right? So the big thing with ADUs, there's the base cost to build, but some of the things that cost a lot are bringing the utilities in and connecting to the existing utilities, right? So depending on what's there and are we going to have to upgrade, that will end up impacting costs. If you're building a straightforward ADU, or are you doing some things that are going to be architecturally more extravagant? Are we doing high ceilings or vaulted ceilings? Are we doing slab on grade or raised foundation? A lot of these things impact costs. The amount of windows and doors, the quality of windows, doors, HVAC, water heater, the finish selections. And just to give you an idea, there were 2 ADU properties that we priced last year. They were the same size. They were both garage conversions, and one was like double the cost of the other one. So the cost can really vary. A good rule of thumb, though, just to have in your mind, from beginning to end cost, you probably want to budget about $300 to $450 per square foot. Typical garage conversion is starting right now around about 100 to 120,000. A new build ADU starting at about 150 on up. That's for, you know, probably a more basic 400, 450 square foot unit. And then again, costs could potentially increase, again, depending on a lot of decisions that have yet to be made. So we always work with clients to understand, number one, the budget, and number two, what some of their preferences are going to be, and bring those two together to see, you know, what's going to make the most sense for them. A lot of times, you know, people have extravagant ideas about what they want to build that their budget doesn't necessarily fit. So we oftentimes need to scale that down to fit within their budget. But a lot of things impact cost. Yeah. What else do we have?
What if you pay for a report, but it determined that ADU is impossible? Is there a qualification process?
Yeah, so this happens very rarely. In most cases, you can build an ADU on a property. But I would say it's better to spend $250 to find that out than to spend thousands of dollars on having someone drop plans to submit to a city to realize you can't build what you thought you could build, right? So better to spend that money up front to find out you can't build the thing you thought. In most cases, though, ADUs are permissible. The areas where you might run into issue is in a high fire severity zone. There might be extra requirements that a city has. If it's hillside and high fire severity, those are areas where there might be properties that won't qualify. But in most cases, you will be able to build the ADU. The bigger question is going to be feasibility. What are some of the either zoning requirements or practical aspects of the property itself in terms of grading, utility connections, et cetera, that will make the project really expensive. Sometimes that's when we're looking at a property, like, you know what, an ADU doesn't make sense. If you look at how it's gonna cash flow versus what it's gonna cost, not gonna make sense. I'd say that's probably only 5 to 10% of the time. Most of the time, ADUs do end up making sense on a property. Yeah.
Florentine, ADU, Sidekick Homes, that was brilliant, right? Give it to Florentine.
Thank you.
Thank you. And I'm gonna share afterwards more information. I'm gonna share your website link and more data how to get in touch with you. Take advantage, reach out to her. She's definitely a specialist, high level, and see if you can incorporate some of the things in your presentations and all the good stuff that you build for agents. That's just brilliant.
Awesome.
All right, thanks for
Thank
being
you.
here.
Thank you.
Thank you so
Appreciate
much. You got it. So that was Florentine. That was just good stuff. And definitely, once again, dig deeper and learn more about that, because ADU is definitely still a hot topic and a good source for income. Up next, we got Paul Yu. Paul.
Hey, Manny, how are you, man?
Hey, good to see you. Hold on for a second. I'm just gonna make you the hot spot and the presenter as well, co-host, if you want to present anything whatsoever over here, just for the case. So Paul, tell us a bit about yourself, kind of a quick background, and take us through that, what we want to focus on, the social media marketing through KW and some of those advantages that all the good stuff that we have.
Yeah, absolutely. Hey, I just want to say thank you for bringing me on, and it's such an honor to be in business with all of you. And certainly, we know for a fact, our businesses. Gary Keller always talks about this, right? You've got to have systems and models in place. You've got to have the people around you, and what I mean by that is, who are the people that you are leveraging, but more importantly, who are the people that are pouring into you? And it is so encouraging. You guys have one of the best and most dynamic leadership teams with Simon, Manny, and the entire leadership team of your market centers, respectively, that are really pouring into you in ways just like this. They're putting these events on, they're bringing speakers in just to kind of say, hey, this is what we want for you. This is how we want you to thrive and win. And then, of course, Gary talks about your tools and technology. I'll be the first to say this. I'm the regional tech trainer for multiple regions. And I will say this, no amount of technology will ever replace what it is that we do. We are in a face-to-face, belly-to-belly type of business. We all know that, right? Here's the thing though, guys. If we just focus on those best practices alone, and we don't have any tools and technology, well, it's 2021. We're about to enter 2022. We're going to be left in the dust, right? At the same time, like I said, if we just focus on tech and we forget about best practices, we're just not going to win. I believe in our industry alone, there's a very nice space for a good marriage between the two. Wouldn't you agree with me on that? So what we're going to look into, Manny has asked me to speak about some social media marketing, some designs, things like that. And when I look at technology, guys, and when KW looks at technology from their lens and their perspective, what you got to look at is this. Here's the deal. So many real estate agents will do business without tech, but so many will do business with a lot of tech. And when they do business with a lot of tech, the way you got to look at this is this. Your business comprises of 3 buckets, right? So the first one is lead generation. We all need leads. Wouldn't you agree with that, right? The second one is your follow-up system. There's a really big saying in real estate, and it says something like this: the money is in the follow-up, right? Number 3 is your transaction management. So if you look at a lifeline of a particular transaction, it will usually go in the form of your lead generating at the beginning, you're following up on those leads, and then you're managing those transactions when you actually get them under contract and have to load documents and get them signed and so on and so forth. Would you agree with that? So what we're going to focus on today specifically is lead generation. That's one of the 3 imperative buckets. Gary Keller always talks about you either have a lead problem, a lead generation problem, or a leverage problem. Okay. But in my opinion, it doesn't matter if you've been in business and you're $1 million producer and you've got all these systems down pat. If someone gives you a good amount of quality leads, you're going to take it all day long, every single day, twice on Sundays, right? So let's kind of rip into this. I'm going to share my screen And I'll start off with designs, okay? Especially because it's October, we're going into the holidays, Halloween, Thanksgiving, Christmas, so on and so forth. So what I'll say is this, what I love about Command, again, I work for KWRI. I will champion Command all day long, okay? But I will be the first to say, does Command have its moments that it glitches? Yes, I'm not gonna lie about that. But I will still argue Command still runs circles around most, if not all other tech systems, particularly software systems in real estate, simply because of the extensive partnerships that we have, but also because you have every single thing in one, right? Let me explain that. What I mean by that is this. If you look at a real estate agent's business and the tools and the tech they use, they'll often, and you map it out, I've actually got it in the background there, right? If you map it out, you'll actually notice that they'll use a series of different tools. It might be Facebook, it might be Instagram, it might be Canva to kind of design their posts, it might be whatever it is. Well, the way that Command is built out, guys, is that it's all in one system. It all kind of talks to each other. And believe it or not, if you think deeper about that, that is massive. That's what we mean by systems and models. It is following parallel to the MREA. And we know for a fact that those agents that follow the MREA and implement it really well are those agents that grow and scale year after year. So understand that when you use Command, you're doing the MREA. That was Gary Keller's goal. Okay. So let's open up designs and kind of go from there. Can you guys see my screen right now? Awesome. Okay. So now, before we get into it, I want to tell you this as well, right? Again, Command is something that is very important in the way that we use it. So full transparency, about 2 years ago, I was actually at a different brokerage, and that brokerage was infamous and in saying, look, we are the most technology advanced brokerage in the world. Okay. And I would teach their technology for that brokerage to multitude of agents. And the one thing that was voiced in their frustrations time after time after time was the lack of customization within their systems they were given at that brokerage, the most technology savvy brokerage. And, you know, when you think about it, that's actually really, really important. Because if you think about this, guys, what we do as real estate agents is pretty much the same thing. We all help people buy and sell real estate. But how we do that is going to be a little bit different. Like how Manny talks to a seller at a listing presentation at the kitchen table might be a little bit different to how Simon does that, right? And how Doug talks to a FSBO client might be a little bit different to how I do that. So what we understand is we're all doing the same business, but we're all doing it differently. And if we have systems and technology that supports our businesses run differently, then that system and that technology that helps us, it cannot be a one size fits all because we all do things differently. And that is the power of Command, is everything in here is customized. So this is the home page right here. If I click on this top right-hand corner, everything in here is customizable. If I want to remove stuff, add stuff, if I want to look at the recent leads at the very top, if I want to look at design updates at the very top, I can go ahead and do that. All right. So I just kind of want to plant that seed in your head because it's actually very deep. So let's go into designs right now. On the left-hand side, you all know we have applets. Just like we have apps on our phones, we have applets, right? Let's talk about the ones that move the needle in terms of lead generation. Remember those three buckets: lead gen, follow-up, transaction management. So let's look into designs. So I'm going to go over very quickly. Some of you may already be doing this. Some of you may not. So let's kind of dig into this. If you click on designs, it'll pull you up to this page alone, right? So these are some of my designs that I've already made and that are already preset in there. I'm going to go ahead and click on create design. Top right-hand corner, I'm going to click on social because we're focusing on social media. That's so powerful for those of you who use it effectively. Let me just say this. Most bang for your buck, in my opinion, in my experience, has been Facebook. but where you get the most intimacy, right, which is part of your follow-up, emotional intimacy is the name of the game, is actually through Instagram, where you can chat with them in the Instagram chat. That's just been my experience. Okay. So when you open up create new design, it's going to take you to this page. We've partnered with a company called WeBrand. So you've got all your designs right here. Okay. And it's literally a plug and play system. Let me show you what I mean by that. If I go to listings, you've got designed specifically for sale. So if you've got a listing right now, click on for sale, and you can see here, you've got social media posts for wide posts, social media posts for square posts. And then you've even got specific designed posts that are optimized for stories. All right. So again, guys, this is not something that was just put together in a day. They've really thought hard about this. They've looked at how stories compared to posts are shown, and they've designed it specifically around the optimization of specific targeting strategies, whether you're doing a story or a post. Okay. Let's just say we're holding an open house this weekend. So I'm going to go open house, and then I'm going to want to advertise this open house. So I'm going to set a design so I can advertise it on, let's say I want to use this particular design. I'll click on that on use, and it's a plug and play system. You're just going to plug your name, your details, your phone number, the address, the time, the day, so on and so forth, the logo. There's my ugly mug. Okay, so look, let me show you exactly what I mean by that. I'm going to click on this, right? I'm going to double click, and I'm going to write, no, I'm actually going to do this on Saturday, October 28th, right? I'm going to expand well, why don't we do this? October 28th, and you can lengthen this out. You can drag it in the middle here, 11 to 2. Okay. And this is going to be at 123 Mini Road. Okay. In whatever city. Los Angeles, so on and so forth. You get the drift, right? Over here, you can just click on that, and you can go ahead and put in a picture. So the way you would do that is you would go to images, you would go to add, and you would upload an image from your computer. All right. And then what I would do is, once you're done with that, I would actually go up and download it right here, top right-hand corner. Click on download, and then you're going to click JPEG. PNG is a pretty good, in terms of quality image. You can download it specifically for printing, so on and so forth. Okay, so pretty straightforward. Just follow the prompts. But guys, my encouragement to you, honestly, guys, I'll be real with you. When I first got this, I was like, how do we do this? You just kind of stumble through it. You play in it for about 30 minutes a day, and you're going to get better as you go along. Okay. So let's go back. So I've just shown you, for listings, as you saw before, I'm not going to save that. As you saw before, there were listings for buyers, for a whole range of things, right? Lead generation. I want to show you this. This is really cool. Under lead generation here, if you go to the very bottom one, it'll say personally branded Zine. And what that is a personally branded magazine. Okay. So these are magazines that have been made and personally branded to you as the agent. So let me show you exactly what I mean. If I go to this one that says new beginnings, it'll open that up, and you'll see there's, I don't know, 16 or something crazy like that pages, where if I go here, you'll see the 16 pages, right? So this is page 1. You're going to see on page 2, you're going to go ahead and just put your image in there, put your name in there, right? You can kind of customize it as you go along. And for those of you who are rainmakers, this is amazing. What a great value proposition for your agents. For those of you who are solo agents, what a great value proposition for your most VIP clients that have done business with you over the last 12 months. Imagine holding a Thanksgiving party and handing each one of these, you spend a few $100s to print these off, beautifully designed, feel great quality magazines that you get to, let me show you, you get to kind of talk about your qualities, your value proposition, but also in this magazine, you get to highlight your appreciation, your deep appreciation, and share success stories of your VIP clients, right? They're just going to feel so loved on that their realtor is going out of the way to do this. So again, guys, this is a magazine that I would absolutely spend a few $100s, take some time to kind of edit this and mold this to be personalized and really show your love on your agents. What a great opportunity that you might have here. Okay. So let's actually get into, I'm going to go ahead and design a post right now. All right. So let's go ahead and do that. Okay. So I'm going to go into holidays. Okay. And what's really cool is, look, they're doing holidays by the month. It can't get any easier for you, right? So let's go into October. That's where we are now. And let's see what designs they have for October. Okay. So look at that. Halloween's coming up. So why don't we do that? Why don't we use Halloween as a post? And I'm going to go ahead and download it once I've designed it. I'm going to show you just how easy it really, really is. Okay. So it says that. That's really cool, right? I'm going to keep this. This is how simple it's going to be. I'm going to do two things and just leave that alone, right? The whole KISS principle, keep it simple. So what I'm going to do is I'm going to go ahead and maybe I'm in Roseville, California. If anyone travels up this way, hit me up. Let's grab a drink. And I'm going to move this down to here. And in the middle here, I'm just going to take that opportunity and fill that space with maybe a logo, right? So why don't I add something? I don't have a logo ready, but let's say, for example, this is my logo. All right. So all I would do is I would add image, see where it says plus, add image. I would minimize that. I would drag it down the middle here, and it even gives you pointers with these lines and these markers to help you see where the center is. And I would leave it at that. Okay. Now, I would say done. You can download it. I'm going to save that. Okay. Done. Now, let's actually go into campaigns. So you see that it's saved there. Okay. Let's go into campaigns. I'm going to go ahead and create a campaign. I'm going to do social posts. Now, before you do this, make sure that you have connected, just like this. You got to connect your Facebook account with Command. It's really easy to do. All you got to do is go into settings, and you're going to see down here, it says there's two Facebook, one's for ads manager and one's for posting. You're going to connect both of them up. If it's already connected, you'll see that where it says manage. If it's not connected, you'll see a connect account, and just go ahead and follow the prompts. It's very simple. Okay. If you have any troubles, be sure to hit your market center tech trainer up. If you don't have one in your market center, hit your team leader up, and they can certainly put you on my calendar. So I'm going to reconnect my account.
Oh, 3 minutes.
I've got 3 minutes.
Yes.
Okay, real quick. So, I'm going to go ahead and browse my designs library. There it is right there. I'm going to click on that. and I've prepared a text right here. Happy Halloween, folks. Pumpkin emoji. Don't let the housing market scare you. Little scared face. Call us and we'll take care of the rest. Who are you going to call? And I'll have a little ghost symbol, the H team 555, whatever your number is, right? So you'll see, I'm going to go ahead and do that. Hopefully this is being recorded. So you'll see the ad right there. Okay. I'm going to go ahead and remove my logo because I've already got it in the design. And then I'm going to schedule these posts for Halloween to go out at 8 a.m. Okay. And then I'm going to go ahead and schedule posts, and then you're going to see schedule posts. And that's it, guys. It is that simple. The other thing I want to quickly touch on is in actual campaigns, for those of you who have not ran a Facebook ad, please go ahead and do that. There are multitude of tutorial sessions. Go ahead and join KW Command on Facebook. Go ahead and join Command Your Conversion on Facebook. And then these YouTube channels are a wealth of resource and knowledge. Nick Baldwin, Marty Miller, and Jay Cermak have tons and tons that you won't even have enough time for to go through on how to make designs, campaigns, so on and so forth. A little quick story. EXP agent came over from EXP 2 weeks ago. I met with him for about an hour, showed him how to make it a Facebook ad. He implemented it that night. In 48 hours, he got 14 leads. In 2 weeks, he got 97 leads. One of those turned into a $900,000 listing just last week. This stuff is real. This stuff works. And I would implore you, for those of you who have tried Command and failed, try it again, and always try it again because it will work. Thanks, guys.
Paul Hugh, that was amazing. Yeah, and you see, I mean, the cool thing about Paul, he can present for hours. It's all good stuff. And you know, if you got the accent, he's from Texas, right?
Right.
So, yeah, New Zealand, that's close. But that's the gist of it. Paul, if you don't mind to drop on the chat all the links of the Facebook groups and the YouTube, because those are good stuff. And once again, Paul, you are original tech director for KW, just brilliant stuff. I mean, can't thank you enough, Paul, for your time. Appreciate it. Okay, so that was a lot of information. Hopefully you guys were able to keep up, but it's the good stuff. I told you. So up next, let's. I'm so excited about that. You know, I have to stay. So let me see if our concierge friends are over here. One second. Let me see. Ladies, are you here? I see.
Hello.
Friend. Hi. There you go.
Hi.
How are you?
I'm great. How are you?
Okay, good to have you both. So let me try and see if we can make you both spotlights. Okay, perfect. So I'm going to have both of you featured so everybody can see you. Great. Okay, so do you need to share screen?
I do. I'll do some screen sharing.
Perfect. So I'll do that. Give us a quick background and then tell us what's coming to our offices. I'm super excited about that. So that's going to be brilliant. Okay, there you go.
Awesome. Thanks, Manny. We have some exciting stuff. Thanks for having us. I will share my screen here and get started. My name is Isla Corcoran. I'm the business development manager with a company called Zoom Casa. And we have Lauren McCarroll with me today. She's the account executive for KW Concierge. So she's joined me and we're thrilled to be here. For those of you that don't know about KW Concierge, I'm glad to be your first introduction. It's an exciting day. We've seen a lot of success with the program over the course of the past 2 years. And we're super excited about it. We're continuing to have some great transactions and provide some great value to your clients. But even more so, we have a new initiative today to launch for the first time ever. So thrilled to be here and to do that. But what I'll first do, Manny, like you said, is give a little bit of background so that you know who we are and a little bit about what we've been doing for the past couple of years. So I'll start first with the general overview of KW Concierge. If the only thing you hear from me today is this sentence, then I've done my job. KW Concierge is a solution designed to help you outperform the rest and provide value to your clients throughout the entire homeownership journey. That means that you can call us anytime, whether you have a seller, whether you have a buyer, or whether you have a client that's not even ready to transact. We really are here to offer solutions and troubleshoot situations with you so that you can make transactions happen and otherwise provide value to clients no matter what they need. We think if you are the first call that a client makes in their real estate journey, then that's consistent with a full service solution. And that's what we're here to be as your partner. So starting first with what we do for sellers, we offer what we call a forward program as a bridge solution, also known as the best way to sell today, plus a renovate now, pay at closing concierge service, also known as pre-sale home prep. These are your seller-facing tools to maximize your clients' proceeds and maximize your commission income. We also work with buyers to offer solutions to help them customize their home. Many buyers today, they're out there for 6 months, they finally find a home to buy. Maybe it doesn't have all the bells and whistles, but they got a home. That's a win today. So if you can introduce a tool that helps them make the bathroom they hate, the bathroom they love, or customize their kitchen, then we think, of course, that's consistent with you doing your job and giving them all the value they need. And then, of course, if a seller, or rather a buyer, can leverage our cash to buy a new home today, then we think that's a powerful way to compete. So we have a cash buyer program to solve that issue. And finally, for your clients that aren't ready to transact, they're living in their home, maybe they want to upgrade it or take care of some maintenance, we're here to provide that solution to you as well and your clients. Starting first with some of our success over the past couple of years, some proof to you that this is worth your time. We found that agents that use KW Concierge performed better than the competition. Their listings sold for 6.4% more and 2 times faster than the broader market. So that means that an agent that introduced KW Concierge and used the program paid for themselves, right? Not only are they helping their client maximize their proceeds, but they're providing value that exceeds their cost and helping a client sell faster, avoid price reductions, avoid the burdens of a long selling process. And in today's market where things are flying off the shelves, they're selling it even faster, inciting a bidding war, then of course they're maximizing their proceeds and walking away successful. So that's what we're really proud to share and some of the success we've had. What we've seen as an even greater indicator of success and power with the concierge program has been the forward program and how many inquiries we've already received as a solution designed to help a client cash out their equity in advance. This program just launched at the start of this year, and we've seen it become really successful, especially as the iBuyer model permeates your market. With Forward, your clients don't have to sell to an iBuyer and sacrifice their equity, but instead, they cash out some of their equity early so that they can successfully buy. They can avoid being contingent on the sale of their home as they write offers. They can pay off their mortgage, improve their DTI, qualify for a loan, write offers, purchase a home, and then you, as their agent, are getting double commission, right? You're representing them on the sale and the purchase. And for a client that otherwise may have been too worried to sell because they couldn't buy, now they can do both successfully, simultaneously, and on their timing. So this is the Forward program, something that we do a lot with KW Concierge, and something that we think is a major tool and a major player today. And what I'll do quickly, I think I have to reshare my screen here, is show a brief video for you about the program, how it works, so that you can kind of get some general information about Forward before I dive into Easy Flip and the reason we're here.
When we were deciding to sell our house, at first our only option was the iBuyers because we didn't want to do showings. Yeah, considering we have a pandemic going on.
And a new baby.
And a new baby, and I'm working from home. We didn't want anybody in our house pretty much.
First, I thought it was impossible to sell the house without showing the house, but Zoomcasa made it possible for us.
Yeah, Zoomcasa's Forward program made more sense because I would be able to buy Before I sell and keep all my equity, I thought it was too good to be true. If I were to sell to an iBuyer with the market steadily going up, I would have given up equity. I would have sold at 387 as opposed to Zoom Casa. We are going to be able to sell for more.
So again, talking about the struggles of a seller or a buyer today, trying to handle both transactions at once, trying to figure out how to buy in a competitive market like today, or an uncertain market where there's question marks, double moves, double mortgages, etc. By introducing this program, we think it's a powerful tool to help you unlock inventory, make transactions happen, and ultimately see your clients walk away happy in a home that they love. So that's us, that's KW Concierge. That's what we do and what we've done for the past 2 years while we've been working with many in the team. But today we have something brand new, again, something we haven't rolled out that we're talking about really for the first time ever. And it's a tool that we call Easy Flip. And really excited to launch it with you all. If you work with investors, if you know how it is when you're dealing with investor clients, then this is something that will be really familiar to you and something that you hopefully will find to be even more powerful than working with your standard investor client. Because with Easy Flip, we're here to empower your business with a tool that will increase your potential gross commission income and not limit you anymore to the 2.5% or 3% commission that you earn on a given transaction. Easy Flip also enables homeowners to get the liquidity they need now while allowing you to secure future listings, build your pipeline, and participate in the value creation upon the resale of the home. Which means that as your investor, we're buying a property, we're spending all this money to make it great, make it sell for more. And when it does, we're actually splitting those profits with you. So again, you're not limited to earning commission on the sale of the home. You're also participating in the upside, participating in the reward that comes from investing in a home and ultimately flipping it. I'll talk about the kind of nitty gritty of how it works. But first, of course, want to explain to you why we think Easy Flip is great. Aside from the obvious, earning more money, we think Easy Flip is a good way to help you expand your sphere. You're calling sellers, you're calling agents when you're working with Easy Flip and building relationships. You're introducing to them potential investor that wants to buy a home, a cash buyer, and building a relationship that means that agent or seller may call you in the future with their next transaction or their next property. Of course, you're also earning more money. As I said, not reducing you to that 2.5% or 3% commission. You're participating in the upside. You're participating in the value creation when these homes are flipped. Plus, you're building a pipeline because every phone call you make and every offer we submit with Easy Flip is a potential listing that you're earning thereafter. Because whenever we buy a home with Easy Flip with you, when it's sold, you're the listing agent and you're the partner, right? So your pipeline grows, your opportunities expand, and your business expands as well. Easy Flip, again, helps your sellers and the sellers out there get the liquidity they need. Their home has been sitting on the market for 6 months, haven't received any offers, whatever the case may be. Now you're the solution. You're giving them the cash that they've been looking for, enabling them to sell their asset and get the cash that they otherwise haven't been able to. Plus, you're building trusted relationships, you're expanding your reach, serving a larger market, and not limiting the solutions just to homeowners with move-in ready homes. You're creating opportunity for all of those homeowners out there. Plus, like I said, all projects become yours once the improvements are completed. So you don't have to worry about a disloyal investor or someone who's working with you every step of the way, from you finding the property, running the numbers, and ultimately listing it and selling it. So what we'll do here is go through a sample and then open it up to questions. We'll do some FAQs, but of course it all sounds great. Once you finally break down the numbers, I find it's a little bit easier to understand. So we'll start with sort of an easy deal, a home that's perhaps worth $600,000. You find the home, you bring it to the team, the Easy Flip team, and we discuss the options. And once we do buy the property, we come up with a strategy to improve it and ultimately sell it. Your insight comes in, we defer to you for ideas, and of course we throw in our professional opinions as well, but you're a part of the whole process. In this example, perhaps the property needs about $80,000 worth of renovations and takes 2 months to complete. maybe 2 months to sell. So we'll use those numbers. The property will be listed by the agent, you, and ultimately sell for $895, let's say in this example. So breaking through these numbers, I've split it up into 3 sections, as you can see here. We have purchase price at $600,000, and then buyer's commission, which we ultimately share. So you're representing us in that initial deal, and that buyer's commission is going back into the pool, meaning the initial spend in this case is then $585. Plus, we said perhaps the renovations cost about $80,000. So adding that to the total spend. We also have a carrying cost. If it takes 4 months, 2 months to renovate, 2 months to sell, it's another $20,000 added to the pool, essentially making the total investment $685,000. In this example, we said perhaps the home will list and sell at $895. Buyer's commission and closing costs come off the top at 3.5%. Then the listing commission is paid to you, leaving us with the remainder profit of $78,150 times 2. We half that, you receive half, and your total in this example is over $100,000. So I'll leave this here on the screen just for a few moments so you can kind of make a note of it, review it. Ultimately, you're obviously increasing substantially the income that you would make on a deal, not limiting yourself to, the 2.5% commission, maximizing your income by participating in the flip, and ultimately the value that's created upon the renovations. So I have a few FAQs we can go through. I'd like to open it up to questions as well, see what some folks think. Starting with, how do we determine the market value when we purchase the home? I anticipate this question might be popping up into some heads. So ultimately, we have an automated valuation model that we use, but we also use your insight and your comps, your review of the property, ultimately what you think the home will list for or be worth. That's how we determine a reasonable purchase price and a reasonable ARV. Improvement costs are also something we work together on. We have a network of vendors, licensed, bonded, insured vendors that we work with. We will work with your preferred vendors. If you have any in mind, we'll onboard them and consider all the options. But it's a team effort, so you're involved in the entire process. We pay for everything. So another question that comes up, are you, as the agent, involved in covering costs? No. I went through the whole economics of the program. At no point do we reach in the agent's pocket and ask for you to throw in any cash. This is something that we cover, and ultimately, again, we share the profits with you after looking at the whole transaction at the end. But we never require you as the agent to invest any money to get involved. In terms of minimum or maximum home values, right now, Easy Flip works strictly on homes between $200,000 and $3 million, giving you, of course, a wide range to work with. But otherwise, we don't have any sort of thresholds to keep in mind. It's open to homes between $200,000 and $3 million. Now, does the agent get paid a commission? Of course, I went through the numbers. Yes, absolutely. You as the agent earn commission for your work representing us in the sale of the home. You won't receive the commission when we buy the property. That money ultimately goes back into the shared profit pool, into the shared bottom line. You can see it as us splitting it, right? Because we reduce it from our overall spend and ultimately reduce it from what's debited from the profit at the end. So with Easy Flip, you enjoy a piece of the profit. We don't ask for your money. We just ask for your help, your time in facilitating these projects, finding these homes, and making this happen. So I'll leave our contact information up here on the screen. We only have about 10 minutes left. Tried to breeze through as quickly as I could so I could make some time for questions, thoughts, input from you all. And Lauren McCarroll, as I said, she's the account executive for the concierge program. So what to do next? Call her, reach out to us. To get involved, it's very simple. You reach out, we'll get you up to speed with the Easy Flip program or any of the services we offer. We'll get you onboarded and make sure that this is a tool that you can use really to stand out and improve your business.
Okay, so first of all, I don't think you guys understand what it means because this is huge. Okay, we spoke earlier about how to build wealth. We spoke earlier about, we heard Doug Pitts sharing, you know, if he would talk to himself 20 years back, 30 years back or whatever, this is exactly what it is. Some of you ask, why if I don't have, you know, access to capital, about this and that? This is exactly what it is. You know, raise your hand or virtually, right? If you're ever had a situation where you got into in front of the house, you know, this is the hot flip right there and then. You didn't have the resources, you didn't have any GC that you know, reliable person you can reach out and ask for you know, budget or a plan. You didn't have people you can reach out to ask, you know, to get bids, etc., etc. It's a whole, you know, production, right? You didn't have the time maybe to manage the project, maybe the property was far away. All the reasons you can imagine and more. What's been given to us over here is basically full on, literally concierge, right? White glove access for you, for us, for you guys to be investors starting today. That's exactly what it is, right? Now, yes, someone in high level like that, for example, been doing this for many, many years. He has his own, you know, strategy. That's great. Most of the people, most of the agents don't have that access. Now you do. If you're watching us and you're not one of our group of offices that subscribe to this service, you do not have access to this, give me a call. If you're part of a member of one of our offices that have access to our concierge, this is it on the screen. They're gonna screen you. You have to be part of the offices, right? But once again, this is a game changer for you guys, right? And as an investor, don't think about, oh, but you know, the commission or when I just sold this property or flip or off market or on market, etc. It's a bigger picture. It's you getting a piece of the action of the resale and getting a bigger number, right? 50-50 on the profit with the investor. Now, yeah, they're going to be, I will circle back to you, everybody, through our brokers to explain what kind of language you need to disclose to the seller, because you're gonna have interest in the property, but that's not a problem as long as you disclose. Back to my point, right? All of you right now got the access on a silver platter to become investors with one of the best teams in Southern California. And so, yes, this is all going to be recorded. Other questions that you might have here on the chat, one of the offices, Ada, if you want to bring something else.
Maybe we've got some questions over here in Coastal.
Questions? Yeah, go for it.
Go ahead.
So first of all, is it, if we're the listing agent and then represent you on the buyer's side, we don't forfeit the listing commission, that's correct?
So if you're already the listing agent on the client's property, then no, you wouldn't forfeit the listing commission on the first transaction. Mm-mm.
On the first transaction?
Correct.
Oh, I know what you mean. Okay. So, and one more thing, do you guys have to have a minimum amount of profit margin on the back end before you will do the deal? And if so, how much?
At this point, no. You know, we're going to run all the numbers with you. We don't have a certain minimum. It's all sort of relative, and we're open to options and really going through this process with you, figuring out what works and what doesn't. This is, as I mentioned before, our first time launching the program. So, you know, we don't at this point have any minimums in place, and we really want to make this a tool that's as successful as possible, even if in the first few deals or with some of the deals, the profit margin is lower than it otherwise could have been.
And hold on, that was, yeah, good question, Richard. So once again, think about, you know, yeah, that's an option if you get stuck with the listing, but if you have access to begin with to inventory, that's you most likely make more sense, right? To think as an investor, or exactly, yeah, you got stuck, the house, you know, but it's also about the margins. You know, if the house is a turnkey, it doesn't sell because it's overpriced. I don't think the concierge is going to take it and flip it with it. There's nothing to flip. Right? So it's just a matter of, like, you know, putting the investor hat, right? Other questions? Who else? Ala, do you mind putting just the, sorry, go ahead if you have anything to add about this slide.
Sure. No, I just wanted to share it up here. I actually do see a comment, a couple questions in here. One of them asks, do the agents share the cost of the remodel too? So that's why I went back to the slide just to share with you. It's ultimately going into the pool in terms of the initial investment that's then debited from the resale price. And that's how we determine what the profit pool is, meaning you're not reaching in your pocket to pay any upfront costs, but once we get to the final resale price in this example of $895, we're splitting the cost of the initial investment and splitting the profit together as well. So hopefully that answers your question. Hopefully this kind of lays it out. And if you have more questions, I'm going to go back to our contact page because again, this is something new. This is something we're super excited about. We have had some success with it already, and we really want this to be a tool that you consider and perhaps just try out. So you can call us with any questions that you might have, any potential opportunities that you might have. We're open to them. Like I said, we don't have minimums in terms of profit margin today. If it makes sense, if it's a potential opportunity, we're here to consider it. You know, some things will be greater opportunities than other, but you know of us as a tool you can reach out to regardless of the situation. And we're here to be a resource to help come up with out-of-the-box solutions, which is really what Easy Flip is designed to be.
You know, another cool thing about that, guys, just to share with you right now, you know, thinking about different angles, and it doesn't mean that you need to drop your own investor clients tomorrow, right? Because that's part of your business, and you always want to have those, but it means that you have another investor partner. Only difference, what they're asking from us is to give them access to such inventory, and then they get a piece of the action by default, right? That's the program, and that's because it's us, and that's how it works. It could be interesting, you know, how that's gonna evolve and grow from here. Ila, Lauren, our concierge partners, thank you so much. That was incredible. And I'm going to show information once again, everybody, by tomorrow with all the content and everything about that. And I think that this is all we have for today. That was enough. Yeah. 2.5 marathon. And remember that once again, I'm going to go back to the other slide. That second step is going to be step 2 is going to be on the 17th, right? On the 17th, I believe it's a Wednesday, but I'm not sure 100%. And that's going to be covering something 1 p.m. to 3:30 p.m. We're going to go over business principles with Hal and Fritz out of the Long Beach office. We're going to share more insight about tax benefits with our CPA. Kevin Cohen is a zoning specialist. He's going to dig deeper into SB 9, SB 10. You guys have to know about that. It's not even an option for us as agents. So you can go online and research more, but there's always updates and changes. We'll talk about real estate syndications from a very, very successful syndicator, and for you to understand how you can access something right away to be part owner of a 250 unit apartment building in wherever, right? And cash flow in a few years down the road, et cetera, et cetera. Let your money work for you. We'll talk about, we're gonna hear from Eric. He's an economist to talk about inflation and the US economy. And we're gonna hear from a special guest that I'm still waiting for him to confirm with us about crypto and real estate. If he's gonna say yes, it's gonna be cool. So if not, we'll find someone else as exciting. So that's it, guys. That's all we have. Simon, thank you. South Bay, Stephanie, thank you. Calabasas, Holly, Long Beach, thank you. And West Side, thanks guys, thanks for being here. Thanks everybody, make it rain, keep it up, and I will see you out there. Thank you everybody, bye-bye.
Thank you, it's awesome.